Real estate investors and business owners are always looking for ways to save on taxes. So today I am going to talk to you about the HSA Health Savings Account that can help you save on taxes. My name is Keisha Rondino. I am a real estate and business CPA. My goal is to educate you on tax planning, tax strategies, so you can maximize your deductions, save on taxes, keep more of the money you make, and build wealth in your investments in your business. So if this is something you're interested in, make sure you hit the subscribe button. So let's get into it. Business owners love to save money, and one of the ways that they can save money is through a HSA plan. It is by contributing to an HSA, you can enjoy tax savings while putting money aside for your healthcare costs. So let's talk about what an HSA is. So an HSA is a health savings account. It is a personal savings account you can set up to pay certain healthcare expenses. It allows you to put money away, and when you withdraw it, it's tax-free as long as you use it on what's called qualified medical expenses. So when you create an HSA, it is your account, it is under your name, and it is using your own money. It's created using pre-tax funds, and you can only contribute up to a certain amount. So there are limits on your contribution. So for 2023, the amount is approximately $38.50 for individuals or for a single person. And for a family, it is approximately $77,750. And it's all pre-tax, so it lowers your income, and that's what makes it advantageous for business owners and real estate professionals. So once you have the account set up, when you withdraw from it, you can withdraw either using a check or using a credit card. You want to be able to track the expenses that you utilize from the HSA. So that's why we say a check or a credit card, because those are ways that you can easily manage and see what has been spent on those expenses. Those expenses that you do pay with those funds does have to be qualified expenses. So let's talk about what the qualifications for establishing an HSA. So in order to establish an HSA, you have to have a high deductible health plan, which is also known as a HDHP. And that is basically what it sounds like. It is a health plan that has a higher deductible than a traditional insurance plan. The monthly premium is usually lower, but you have higher healthcare costs that you have to pay before the insurance company starts to pay its share of the deductible. So that's why it's considered to be a high deductible health plan. And there's usually a minimum on these plans. So the minimum for a single person or an individual is approximately $1,500, and the minimal deductible for a family plan is roughly $3,000. Now, keep in mind that this is the minimum. Your chances of finding a plan that is the minimum for the deductible is going to be rare. They are out there, but it's not very common. So keeping in mind, this is the minimum. So as you are looking for a plan, that you may not necessarily find one that has these absolute minimums. So another qualification for establishing a HSA is that you can't have any other insurance. You only can have that one HDHP plan with no other insurance, and you can't have any Medicare either. Now, you can have an outside vision plan, you can have an outside dental plan, long-term health care, workers' compensation plans, or disability insurance. But besides that, it cannot be another insurance plan, and it cannot be Medicare. So let's talk about how you actually use these HSA funds. So you withdraw the funds to spend on qualified medical expenses. So, this is generally any expense that your health insurance does not cover. And it can include anything from doctor visits, from hospital stays, from emergency room visits, dental treatments, anything that is not covered under your insurance, but it is paid for a medical expense is a qualified expense for the HSA. Now, remember that that does not include your premium. Your premium is not a qualified medical expense under the HSA. So that is something to really keep in mind. When you do withdraw to pay these qualified expenses, you want to keep the receipts and you want to keep the statements from the HSA plan. You may need them if the IRS ever has any questions about your HSA accounts or any amounts that is being reported to them on your tax filings from the HSA. If you take any money out of the HSA and it is not used for qualifying medical expenses, then you will have to pay tax on that money. The whole purpose of this plan is for you to use on medical expenses. So if you don't use it for medical expenses, you will be penalized with that tax that is due on that amount. So now that you've established the HSA and you've contributed to it and you've pulled money out for qualified expenses, let's talk about how that is reported for tax purposes. So you will report your HSA contribution using Form 8889, and any contributions that you make that is over the annual limits are not going to be tax deductible. You can make contributions anytime throughout the year, and you actually have beyond the year to make contributions. So you have up until the due date for your tax filing in order to contribute to NHSA. So we're now in 2023. You have up until April 15th of 2024 in order to contribute to your HSA. So generally, one thing to keep in mind about an HSA is that because of the limits, the contribution limits on it, it is usually beneficial for those that don't have very high out-of-pocket medical costs, because remember, roughly about $38.50 for individuals is going to be the maximum, and about $77.50 is the maximum for a family. So $38.50 for an individual and $77.50 for a family. So if you have much more expenses beyond that, it doesn't really benefit you as much to establish that HSA. But establishing it is going to definitely help if you are a real estate professional as well as if you are a business owner. So utilize it effectively, utilize it to where you're going to pay those medical expenses and you can see some tax savings on your next tax filing. So subscribe for more videos, and I will see you soon.